Oh, wait, I kept you on there. It's okay. You're still on. Hold on. Okay. Hey, guys. Hey, everybody. Okay, so I think we got everything together. I was looking at the comment section. Looks like people are coming on in. Hey, hey, hey. I'm so excited about tonight, y'all. Listen, I just got home from work. I ain't got nan makeup on. So let me live my life, okay? Let me live and be great on tonight. But I'm really excited about tonight's Financial Fridays because you guys have been asking over and over and over again all about stocks and like investing and all that stuff. And I have some investment stuff that I do, but I am not no guru. Like I literally just put some money in Robinhood and hope that it made some money. So that's what I did. But my girl, Kristyn Alexis, has been doing the thing and I follow her. I watch her. I really wish I had a little bit of extra money I could just give to her and be like, here, invest for me and let's hope I win. Like that's how I feel. So without further ado, I'm about to bring my good girlfriend, Kristyn Alexis, on, and she's going to give us some tips for beginners who want to get into investing.
Hey, girl.
Hey, girl.
How are you? Good. I'm doing really good. Thank you.
Yes. Okay, wait. What are we sipping on tonight? What we got?
You know, I have some high quality H2O over here.
Okay, high quality. I hear you. Well, I have been following your journey and I've been loving it so much in regards to what you've been doing with investing. So I know I have a lot of people here who have been asking, like, how do we get started with investing? How do we, just do all these things? Hold on, people saying they're buffering. So let me, wait, is it me? Am I the buffer? Or is it, because it's clear over here, just do all these things. Okay, let me see. Hopefully that fixed it, maybe. Okay, so maybe it's just YouTube. It's not us. It could be YouTube because it's clear on our screen. Usually I can kind of tell. So it may just be YouTube being a butt. So that's fine. So what I was saying was, basically you kind of got into, investing. So what made you get started with investing?
The biggest thing that got me started with investing is when I went to business school. Gosh, it's been a long time. I'm about to date myself, but back in 2000, and I believe I would have got in there like 2010 and graduated in 2011. We were going through a recession at that time, and I saw a lot of people who at that time invested in the market and came out with a lot more money than they initially had put in. So I told myself, if we ever go through another recession, I was going to use that as an opportunity to grow whatever money I have at that time to, the next level. And we're here in 2020. Things are a lot crazy right now. And, I felt like it presented an opportunity and I started to see other people invest in the market. I have a cousin who's invested and he's been doing it for a while and has been able to, consistently grow his portfolio. So, I was like, hey, no time like the present. I don't have my commute anymore. So we're going to take advantage of that time and do this research.
So that I need I need a little extra coin during this because you got started at a really, really good time with everything happening and just kind of like diving into it. What were some of the things that you did just to kind of get started with your process?
Yeah. So, okay, with my personality, I can be very, I don't want to say the word obsessive, but I feel like if I don't understand something, I'm going to do everything I can to learn. You know what I mean? I want to learn the caveats. I want to learn how it works. I want to learn the things you have to take into consideration. So basically, I just started by researching everything I could about the market to understand. And I started from the beginning with like, what is the stock market? What is a stock? What makes one company a good company versus another company? How do you truly value an organization? And just by doing those simple things, it helped me to build confidence because I'm putting my money in there. You know what I mean? So
Right.
I want to put my money into the market and ultimately risk losing my money, you know. And when you go into the stock market and you're putting your money into companies, it can be a risky investment. So, you know, I wanted to make sure that I truly understood what I was doing and how to mitigate my risk, which for me, studying, watching videos, reading books, those were the things that helped me build my confidence to do that.
Oh, wow. Okay. So give us a book. You know, you got to drop a book that we need to read.
Okay. So hold on. Let me grab my Audible, because I have
it's on Audible too?
Yeah. So I started with Audible, and basically I started with the first book that's called The Beginner's Guide to the Stock Market. I feel like that book really helped me in the very beginning, just to understand some of the pitfalls that I think people run into when they first jump into the market. Just simple things like at the very beginning of the day at 9:30 when the bell rings, there's typically a sell-off. So if you're buying stocks at the very opening, you know, bell, you run the risk of buying at the higher price of the day. And maybe the stocks will come back, but, you know, you want to get the best price you can. They always say buy low, sell high. So, you know, when you're coming into stocks, especially if you're going to day trade, it's important to understand what the market's going to do and to use that as an opportunity to decide if you're going to actually get into that stock that day. Sometimes a stock sells off and it literally will sell off for the rest of the day. Like, for example, today Peloton did that.
I was gonna ask you about the Peloton thing. So kind of explain just that stock from your perspective, because I know, well, first let's, precursor. This is not giving you advice on what stocks you should purchase or anything like that, which is why I wanted Kristyn to do this, because she's actually investing her own money into this. And so this is like real life stuff. So today, Kristyn, you talked about your Peloton. You bought in, but I think it was low, or it dropped. There was a dip. So can you kind of explain it in po man's terms, what happened today with the stock that you bought?
Yeah. So, okay, I've been trading Peloton for a while. I bought them the first time. I want to say it was like $78 is when I made my first purchase of Peloton. So when I made that purchase, I want to say it was maybe 2 or 3 weeks ago, and I've been watching them for a while. I take that back. I bought them weeks ago, bought them once, traded them, sold them, didn't look back. I've seen their stock grow, and I just personally felt like maybe they were growing too fast. And I wasn't sure if the value of the actual price of the stock was going to be there to support itself long term. So I personally have stayed away from Peloton for a while, just because I wanted to see how things went. And with them being at like $70, they kind of danced around like 60 some dollars, $70. I felt like that was kind of high, and I really hadn't seen enough information, enough data to support that price. So fast forward to now, about 2 weeks ago, I just have really felt real confident about the price. I felt really good about the company. I have a Peloton. You know, I'm in their Facebook groups. I feel really strong about what they have coming from a product offering perspective. So I felt real confident that this company, they're going to be around. They're going to grow. You know what I'm saying? So I made my first purchase. And then this past week, if you haven't been trading, there has been a sell-off in the market. So
so what does that mean? Like, pause for the cause. What does sell-off mean?
Yeah, so ultimately, stocks have been performing really well. We've hit some highs this year. The market has bounced back from what happened back in March when everything shut down and the market had its huge drop. And people have been making a lot of money. So when the market grows so fast and you reach new highs after new highs, and you continue to have this rally happen and people are so excited, everybody's making money. Apple had a split, Tesla had a split. So everybody's making money right now. But there comes a point where when you're making so much, people start to get nervous about their gains. So it's like, you think about it, let's say you made $5,000 extra dollars and you're sitting on this $5,000 extra dollars on top of your initial investment. You're going to start to get nervous that you don't want to lose that money.
Right.
So there comes a point where the market is going to take the gains out and people are going to pull back their, what they've made, and it's going to reset itself. So what they're speculating right now is that we're potentially going through a correction. We've seen stocks like Tesla where it's ran up so much. I want to say, if I'm not mistaken, don't quote me, but it's like 3,000% up this year. I mean, this time last year, Tesla was $50 a share. They ran all the way up to over $2,200 before the split. And now they're back down. They did I want to say a 5-way split. And right now the price is around $374. So long story short, when you run up that high, there comes a point where people get nervous and they say, you know what, let me take my profit off the table. So that's what you're seeing right now. That's the speculation for what we're seeing right now, is that there's a correction happening where prices are getting corrected down to what they think the real price should be. And then when that happens, people take their money. New people are going to enter the market, and they're going to, buy those same stocks, and things are going to start to go back up. Hopefully, knock on wood.
Okay. I get that. Okay, so that makes a lot more sense. So with your Peloton stock that you bought, and then today you were like, it wasn't a good day. Was that today? Today wasn't a good day. I'll be low key like paying attention. Like, it's my stock. I'll be waiting on you to post about what our stock did today.
Look.
So today, what happened with the Peloton?
Yeah. So over the last few days, there's been a lot of anticipation for the earnings call, which happened last night at 5:00 Eastern time. And because of the anticipation for the call, people figured that they were going to have a good call. People have been buying bikes. The stock has just been having a lot of excitement. There's been a lot of buzz around the fact that with, Corona and people staying home and not going to the gym, that they're trying to find alternatives. So they've been buying bikes, treadmills, etc. With that, the call was yesterday, and the stock had a rally. There was a huge rally leading up to that call. So I want to say the stock went from, when I purchased it, because I had sold Peloton like Monday, I rebought in, and I can't remember my purchase price, but I think it might have been like $88. Purchased them at $88. They literally all day yesterday, it was slow. Like, it rallied, and then it was like, I missed the rally because I didn't hold them the night before. So I waited till it dropped, purchased it, and then they sold off all day, which is typically, you see that when a stock runs up too high, they call it, a lot of people do what's called gap trading, where if it goes up too high, it's going to come back down that day. So you trade the gap. So long story short, they went down all day, right before close. No, not even before close. After hours, it was like 5:00. The stock went up almost $10. So I bought in at 88. I sold my Peloton at 96 last night. And I sold almost all of it, and I ended up holding like a little bit. So basically what they'll often tell you is sell a portion of it so that you can get rid of some of the stock you had, hold the profits, but then keep a little bit so that you can still take advantage of the gains in the future.
Okay.
I should have sold all mine, but that's another story. So today, over night, or I guess this morning after hours, it ended up hitting $100 a share. So that was like huge. Hits $100, and after that, they sold off all day. The whole market sold off ultimately. Well, I should say the tech stock sold off, and it's been a pretty bad day in terms of when you look at just everything across the board. It was a pretty red day, a bloody day, as some say.
Oh, wow.
Now, I think Peloton, if I'm not mistaken, is sitting back at like $85.
So it went up, it had an uptick, and then everyone was like, oh no, we need to take our money back.
Yep, take that money. And then when the whole market's correcting, a lot of times what you'll see is people will pull all their money. You're not just going to pull it from the big stocks that are correcting. You're going to take it from everything. You want to protect your money. You know what I mean? Right. And when people have what's called a stop sell in place, which basically you put that under the price to protect your gains. When they have a stop sell in place and you have them all across the whole market, when a stock starts to pull back and it pulls back too fast, those stop sells start triggering like dominoes. You know what I mean? And it just spread until it pulls back to a certain price. And a lot of times they'll call it a support level. It'll pull back to that support level. And then, if you're stuck in it, you're going to have to ride it out.
Look, stuck now.
Exactly.
Wow. Okay. So what would you say for someone who's just getting started and they're like, I don't even know where to start? So we have our book that we need to read. What are some key things that you wish somebody would have told you when you first got started?
Yeah. I think the biggest thing is when you first start is that you really want to get familiar with the market. So they have things called paper accounts that you can actually trade in. And I highly recommend using a paper account before you trade with real money. And I say that to say I came in with real money. I actually funded my account with $500 at first because I wanted to just play around and get comfortable until I finally got to the point where I could use like more money to actually trade and do some day trading. And I think the biggest thing is when I first started with real money, I made real mistakes. You know what I mean? So, there's just so many things that can happen. There's so many things to take into consideration when you're learning indicators. I learned my indicators first before I truly learned price action, which was backwards. I would say you definitely want to learn price action before indicators. And I was trading off indicators, which I didn't realize at the time that indicators are something you should use to confirm the trade, not to make the decision on the trade. So a lot of times, you play with indicators and you may come into a trade based on what those indicators say, the data says.
Yeah.
In reality, if you understand the price action of that stock, you'll be very confident, and then the indicator will confirm. Okay, it'll give you the green light. Hey, girl, it's time to go. So I had to learn that the hard way. Yeah, so I say start with a paper account. Another thing I did is I would make a point every single week to learn something new. And there's a lot of topics in trading that I think are important to understand. Candlesticks, indicators, price action.
We got a whole lot of vocabulary words we're getting here tonight, guys. I hope y'all are writing them down so we can go back to study. Candlesticks, indicators. Okay.
Yeah.
Okay.
Gap trading. I would definitely understand gap trading.
Okay. Let me get this out.
Look, I would understand support and resistance and what is support and resistance and how is it established.
Okay.
That is very important. Almost one of the most important things. You also need to understand just the fundamentals of trading. So, for example, what are the different types of orders you can put in? A limit order, a market order, a stop order, or a stop limit, a stop market. I mean, there's just a multitude of orders that you can put in, and what do each of those orders mean? And I would probably create like a cheat sheet for when you first start. That way, when you go to make those orders in the market, you understand what they mean. Because I've seen people, I'll just tell a quick story if that's okay.
Girl,
there was a stock that went viral, and this stock was running up really high, and it was doing what's called going parabolic. And parabolic is when the price is basically going straight up. So you'll literally see in a 1 minute time frame, the stock is just, the price is doing this. So when a trade goes parabolic and it has too much volume at one time, the market will actually freeze that stock. They'll put a hold on it and they'll stop trading to kind of let the orders that are out there process, because it's just too many orders for the street to process.
Okay.
So when this happens, people will start to put their orders in there to try to protect their gain. So they'll put what's called a stop market in place. So because there were people who did not understand what a stop market was, when the stop market triggered and their order was processed, they ended up being pulled out at a price significantly lower than what they had put in that they wanted to get out. And wow. Is a stop market guarantees execution, but not price. So there's nuances to the various orders, and you want to understand when you use each of those orders and why. Whereas a stop limit is going to guarantee price, guarantee price, but not execution. So when they're prioritizing orders and you put what's called a limit order in when you're going to buy a stock, let's say you want to buy a stock, but you want to buy Peloton for $100 and you put a limit order in, that guarantees you're going to get it for nothing more than $100. But it doesn't guarantee execution. So if somebody else comes in and they say, I want a market order, and the price is actually $100.50, they're going to get priority because they were willing to take the higher price and guarantee execution. whereas you wanted to guarantee your price. So there's just a lot of little nuances that if you don't understand that, it could be the difference between coming in red and green, you know? So you definitely want to understand just all the various terms. And I made a point where every single week I studied a different piece of trading, you know, how to value a company, how to understand what market capital means, how to understand volume, like why is volume important? People talk about, look at the volume and it's got high volume or the volume is low. The differences between trading in the day versus the night. There's so many things about trading that if you come in like green and you just jump in there, really get eaten up, especially by people who know what they're doing. Because ultimately, people who are in the market and they are experienced, their job is to take money from the market. So you come in and you don't know what you're doing, somebody is going to take your money from you. Because they know what they're
doing. Coins. Can't nobody take no coins. See, this is my problem. This is my problem, sis. Can't nobody take my coins. Like, I have a strong dislike for the fact that, like, at any given time, somebody can just, like, all my little coins that I earn are just gone. I need to get over that. But that literally, that statement is what gets me every time. To be like, I don't know if this is for me.
But the thing is, though, is if you if you master, and I think that's what for me, where I was saying in the beginning, I'm kind of obsessive about certain things. So I'm thinking, okay, this is like a game. It's a strategy game, basically. And if you understand all the little things, you can position yourself to be more successful. And it's also a statistics game too, because when you do certain moves in the market, there's some moves that have a higher probability of success versus others. And when you start to understand that, like, for example, gap trading, most people don't know that if a product like Peloton last night ran up $10 overnight, the likelihood that it's going to continue to run up the next day is very low. So if you come into that trade first thing in the morning, you're going to lose, because most people understand that 80% of the time in a gap trade, a stock that gaps up overnight is going to walk down, period. Like, people take their profits. You know? So it's just important to understand those things so you don't make those mistakes where you end up stuck in a trade and you have to wait until that thing comes back, because, you know.
And just kind of hoping that it does come back, right? Because you don't really know if it will, and then now, like you said, you are stuck.
Yep, exactly. When you get stuck, I mean, there's a lot of strategies you can do to get out of that situation, but ultimately, you want to do what you can to position yourself to not be there. You know.
Okay. So cool. So just taking some time out to really understand the terminology. It seems like that's like a really key thing, because you gave me like 7 different terms already from my notes that I had. Like, I've heard of stock market, but I didn't know the difference between the stop limit order and the stock market and stuff like that. So that's like important to me to go learn these definitions so I can have some type of idea of what's going on.
Yes, like, it's super important. And that's why, even when it comes to brokers, I recommend TD Ameritrade, because they're one of the brokers that actually has a really good training inside of their brokerage account. So you take their class, like, I wouldn't call them classes, but they have like formal training in there where you can learn everything.
And that was with TD Ameritrade.
Yeah, I like TD most, and I've played with them all. I played with Robinhood. I played with what's the other one? Webull. I actually have a Webull account. I've tried TradeStation. That's a really popular one amongst like professional traders. And of all of them, I prefer TD Ameritrade for a lot of reasons.
Okay. Because I was actually, that was one of my questions I was going to ask you, because I know a lot of us beginners, like, I have Robinhood, and so far it's all right with me, because it's just, you know, I just dabble. I'm not really into it. And I haven't really invested a whole lot, but it has helped me to kind of see what goes on in the market and how to, like, use it from a very, very beginner state. I can definitely say that that's what Robinhood does for me, but I've earned money. So I'm not mad at that. But what if for just getting started, what would be maybe a couple of apps that you would recommend us starting with?
Yeah, so I'm gonna grab my phone. So, like I said, I definitely recommend TD Ameritrade, and I'll just real quick, if it's okay, just give you guys a couple bullet points as to why. But for me, I like TD Ameritrade because they have the data. So you're going to get the analytics, you're going to get the indicators. You will have access to a platform called Thinkorswim, which actually sits on top of TD Ameritrade. And Thinkorswim, you can actually use it either on a desktop version or you can use it online.
Okay.
It's very slick. It's similar to TradeStation, but when you talk to people who are professional traders and who day trade, a lot of times they prefer Thinkorswim because of the options platform that they have there. So it's just a really, really great platform. At first, I was kind of more in love with Webull because I think Webull looks a little bit sexier.
Uh-huh.
Same time, I think once I've started to use TD Ameritrade, just when it comes to the resources and all of that, I prefer it. The other thing is when you compare TD Ameritrade to Robinhood, I do think Robinhood is great for people who are new and who aren't really going to do a lot of research and aren't going to look at a lot of the analytics and whatnot. But I think once you start to progress and invest more money and really want to start to make more moves and do more trading in the daytime, there just comes some limitations to Robinhood. Also, when you are in Robinhood, you cannot designate beneficiaries in your account. So let's say you pass your account, there'll be more challenges for your family to access your money if something happened to you. So that's also something to take into account as well. I've also heard just situations where people being blacked out in Robinhood during the day. Like, I think when you compare the platforms, I'd probably rank them like TD Ameritrade, which again has Thinkorswim. TradeStation is another one.
Mm-hmm.
And then I'd put Webull like right up there with them. But Webull has its limitations as well, in my opinion. And they're not a US based firm. So I think from that perspective, sometimes you just think about your money and like the risk there, which it's probably, you know, in the grand scheme of things, I'm sure the likelihood of something bad happening is pretty low. But yeah. So if I could just spike out a couple things, but going back to like which apps I'd recommend, CNBC. I think if you're in a trade and you have companies that you are holding money with, I would create a CNBC account, and you can do the free version of the account. They also have the ability inside of their account to create watch lists. And the watch list is you have to duplicate your watch list that you have inside of your brokerage account. But the cool thing about it is you can set up alerts inside of their app. And I'll tell you, when I am using this app and I'm watching the market or I'm doing something and I see an alert come across my phone for what's happening in the market, it tells you like that. So if the whole market drops, I typically get a notification within maybe 30 seconds of that happening.
Yeah.
So it's pretty fast. And the other cool thing is like today, I woke up this morning, I had my Peloton shares that were left that I hadn't sold. And first thing I did was, okay, let me see what news is out here about Peloton, because they kind of collect all the news that's out there in the market and they put it inside of this app. So I love it for that reason. I feel like it helps me to just kind of be connected.
Yeah.
I have all the fresh, good, high quality information on my my trades. The other thing I would probably recommend is Yahoo News. I would use them after CNBC. I think CNBC, in my opinion, is like top of the list. Then Yahoo, and then Apple. I would definitely set up your phone. Like if you have an iPhone, set up your Apple News as well.
Because I get those notifications too for like the different stuff that's going on, and so I really like Apple.
Yeah. So I would definitely have that too. But CNBC, their whole platform is about money. So I would definitely have CNBC on your phone. And one thing I will say, just even if you don't get into it super hardcore, super serious, being in the market has just opened my awareness to what is happening in the country financially more than ever before. I feel so better connected to the market from a financial perspective than I ever have. And I will say that in itself is just a huge value. Like, I don't feel out the loop with what's going on. And I don't feel like I need to watch I call them the talking heads, but like, CNN and some of those other networks. I'm not a huge fan of some of the other networks. But I personally really like CNBC. And I think, like, if you're working from home, you will notice, like, a lot of the senior executives at these big companies, they will have CNBC on in their offices. They keep it on. Like, people swear by that app. So I would definitely get that app downloaded right now.
CNBC. Got it.
For sure. And then the last thing I would recommend is, if you have companies that you're going long with, meaning you're holding that company long term, I would set up the Google alerts where you'll get an email at the end of the day. I think they come out at like 4:00, where it'll just basically collect all of the articles it can find on the web. Now, the Google alerts, the articles you get, sometimes they're kind of spammy, if that makes sense. Like, you'll get everything. So I have right now, like, I want to say Pfizer, I've got one on them. And I get everything. So anytime somebody posts any article, it could be Pam Jones puts an article up, I'm going to see Pam's article. So it's nice, though, because they send you it in one email with all the links, and it's
okay.
And I do like that. Like, I look at that email at the end of the night, and I'll just go through the articles real quick and see if there's anything that I missed. But typically, I would have already seen anything substantial in CNBC, and then this is like the backup to give me the stuff that maybe CNBC thought wasn't credible enough. I might still be interested because I want to know what Pam is talking about.
Right. Pam might have a little insight.
Yeah, exactly. So I did set up Google alerts on, like, just my primary accounts, or I should say, stocks that I trade.
Okay. Cool. So I'm just like, first of all, I'm excited, like, because I feel like I've got homework to do now. And that always excites me to walk away feeling like, okay, it may not be as scary as I thought it was to, like, really dive into the stock market like that. Because like I said, for me, it's my money. So what is the app again that you can do paper trading?
Okay, so TD Ameritrade has a paper trading account.
TD Ameritrade.
Yep, you can paper trade in TD Ameritrade. Webull has paper trading.
Okay.
TradeStation has paper trading, and I highly recommend it. The other thing I would say is, if you decide to go into getting started, I would not trade a company that you have not watched their stock for a few days, because every company has, like, I don't know the proper word, but I would almost call it like a mood. And you get a sense for what the mood is of each stock when you watch that stock. Like, for example, you can see, like, Peloton has a mood where they don't usually do a lunchtime run up. Whereas there's some stocks and some companies where at lunchtime every single day it runs up, and it'll have a mood where it'll just, like, run up at the lunchtime hour. The price will go up. And then after lunch, it'll sell back off, and then it'll have a run up before close, and then it'll go. So it's good to understand, like, what's the mood of the stock and what that stock typically does. And I never trade any stocks that I don't watch for a couple of days for that reason.
Okay. So that was a good tip. I hope y'all wrote that tip down. Making sure that you study the stock before you get into it. I will say, so the one stock, this was my big girl moment. So I was paying attention at the beginning of everything, and I invested in Dollar Tree because they said Dollar Tree stock was going up because there were so many stores closed and out of stuff. People were now going to the Dollar General. There was Dollar General stock went up. They were going to the Dollar General to purchase regular items like milk, bread, stuff like that they weren't able to get from regular grocery stores during, when everything started. So I invested in them, and I watched them go up. And I was like, I'm gonna buy some. So I bought some, and then I don't really know what to do with it now. So here we are. But I felt so good because I was watching, I was paying attention. I actually started watching TV a little bit more, like what was going on in the stock market, trying to catch the news parts, and then just reading articles and stuff about it. I think I invested in like a company that was coming out. They're not selling weed, but they're like a part of the process for the new, laws regulating with marijuana sales. So I'm like, I don't really know what to do with that either. So here I am figure out what it is that I'm going to be doing.
Yeah. It's helpful to, when you come into a trade, come into that trade knowing what your end game is. And you try to like understand for that stock where you think the price could go, and have that like be the story you're trying to build about that company. So you know when it gets to that point, what your out is. So for example, Pfizer stock never passes $37 ever. Like it's very rare for them to go over $37.
Oh,
so
wow.
I think today they might have closed at like 35 because like I said, the market was kind of selling off today. But when you look at them and they're at 35, you know, okay, I could probably make a couple dollars because it's not 37 yet.
Right.
When they get back to 37, that's it. Like it's going to stop. So it's good to understand what the limit is for each stock, and when it gets to the point where it's oversold or it's maxed out from its potential, unless they come out with something new, innovative to take them to the next level. So when you enter a trade, and even if it's a short trade where you're doing a day trade, you want to think about, okay, based on the historical levels for this particular stock, where is my out? You know what I mean? You know that stock has only ever hit $100. If it's at $100 and there's nothing that you like, you just get this feeling that they don't really have anything else coming.
Yeah.
Kind of it may be time to take your money, because if you start feeling that way, I guarantee everybody else
is too. Yeah.
Mm-hmm.
So I like what you said. And I think that's like a key thing, is to what is the story that you're going to tell for your stock. So how do you want to tell your story? What are you looking at for your stock to do? Now that's got my, see, that's how I think about stuff like that. I'm like, what can this do? That's it. Okay, put me on track.
Look. Yeah, because once it's exhausted that, then you go, okay, it's probably time to move on. And Warren Buffett does it. That's why he exited airlines, because he felt like for the money he had invested, even though it had dropped, he's like, you know what, I'm gonna move on to something else, because he felt like the potential for them to be profitable in the near future is probably pretty low. The risk for him wasn't worth it, because if they go bankrupt, you don't get to keep your money. Your money's gone.
Wait a minute. Hold on. Wait.
So yes, that's why you want to make sure companies are stable before you give them your coin, because if they file bankruptcy, they can file to not pay back their shareholders as a part of that process. So
no. They gotta give me my money. They gonna have to run me my money. That's not okay.
Yeah.
Girl.
So that's why you want to make sure you understand, is this company a safe company? Because a lot of people put their money in the airlines. A lot of people put their money into what's the other one? Cruise lines. You know, but there's a chance people could go out of business. Companies could definitely go out of business. I had a friend who invested a lot of money in a company over the summer that went bankrupt, and he had invested because that stock was running up. It ran up, and at nighttime, they put out a statement that they filed bankruptcy, and he lost his money. It was gone. So, you know, fortunately, he could pull out what was left before they actually dissolved everything, but he lost 50% of his investment like that. It was gone. You know,
so this is why people, okay, so that's the part where I think I've seen where people like kind of go crazy because the stock market, and then a company has closed and they've lost everything. So that's probably the piece that I've seen and been scared of. But they would have to run, like somebody gonna see me, because y'all gonna give me my money.
Like, who gonna fight me about this?
Right. Tell them to come here. They gonna have to come to the front of the room and explain why we just gonna go bankrupt, because this is not okay.
Right. Exactly. But that's why you want to invest in good companies. Companies like Apple, where Apple has a lot of cash on hand. So the likelihood that they're going to go bankrupt is probably pretty low.
Yeah.
They're so innovative that we know they're going to continue to do things to increase the value of their company over time.
Right. Girl, that just made me heated. I'm heated for whoever. Like, somebody go bankrupt, they're going to have to see me. I didn't put my money. They're going to have to see me.
Yep. Exactly.
Oh, wow. Okay, well, we had some questions over in the comment section. I'm going to kind of start from over in the top. I think I saw some coming in. Where did it go? If you guys have questions, make sure you post them over on the side.
It looks like there's some questions about hours. So maybe answer that real quickly. So in terms of brokerage or hours that the brokers allow you to trade, TD Ameritrade's trading hours are from 7 in the morning until I believe it's 8 in the evening. And that broker, that's a nice time frame. However, Webull, which is one reason why a lot of people like having Webull, it is because they actually allow you to trade from 4 a.m. until 8 p.m., which is a huge benefit. So you're allowed to come in early. And what's crazy is like sometimes I'll be in a trade for TD and I've unfortunately woke up at 4 a.m. to check my trade because I know there are people playing with my money right now. And, you wake up and you peek at your stock at 4 in the morning and I roll back over. So those are some of the pros and cons. Robinhood, I believe, is similar to TD Ameritrade, if I'm not mistaken, but don't quote me because I've never actually traded with them out of, standard hours.
Okay.
The stock market is open from 9:30 in the morning until 4 p.m. And then major holidays, they're obviously closed, but that's the time where the opening bell and the closing bell happen.
Now, what time is what time zone is that?
Oh, the Eastern time.
Eastern time. Okay. Make sure we put that out there because I'd be so mad. I'm Central, so I need to know.
That's a good point. Look.
Come in thinking I done really did something and I'm extra late. Okay, so have you tried Fidelity Investments before? That was a question.
No. I actually moved money from Fidelity to my TD Ameritrade so that I could day trade. So I used to have a Fidelity that was managed by I don't know what you call them, but I had an investor who managed my account for years. And I just felt like, I'm like, look, this is my opportunity to learn and to do it myself. And he's done a decent job with it, but the return that I've gotten over time, I felt like I could do better. So I actually closed my Fidelity, but I've never managed my account in Fidelity.
Okay. Mm-hmm. All right. And how long did it take you to learn about the stock market and then your decision to start trading?
Yeah, so I started, I would say, more seriously in March once we were like working from home. Mm-hmm. And I've been trading since then. So I don't know how long that is. What is that? 6 months maybe that I've been.
Okay.
Yeah.
Okay. So what about tech stocks when there are new releases, like the Apple iPhone release? Is that like a good time to buy in? That was one of the questions.
Yeah. So this is actually a great question. I get into this conversation a lot with my mom because she'll be like, such and such is coming out with this, you should buy because they're about to come out with that. Mm-hmm. And I think one rule to always remember is if you know that and everybody else knows that, it's already built into the price of the stock.
Oh, okay.
When that day happens, you could see some bumps, but you also, and we've seen this happen a lot in the current market, a lot of times on those days, the stock will actually drop and sell off. So, for example, Lululemon had a good earnings call this week, and their stock sold off.
I thought they was going bankrupt.
Lululemon?
Yeah.
I don't know the what's the word? But their stock price is really high, so I don't know. $300, $400.
I thought, yeah, them the leggings girls, right? Them the leggings people. Yeah, I thought they.
I'm familiar, but I know they had a good quarter, and
y'all don't quote me on that. Anybody that sell Lululemon, I'm sorry. I thought they had went bankrupt, and they was that. I don't know where I heard. They could have been in one of my dreams. Ain't no telling. Ain't no telling at all.
Yeah, so I would say just keep that rule of thumb in mind is if you know that something is coming on a day, it's pretty much already factored into the price of that stock.
Oh, okay. Oh no, okay, no, it was not Lulu, it was Lulu.
Oh, okay. Lulu. Oh, okay.
Okay, not Lulu. My bad. Wrong people. Okay. Wrong people. Y'all don't go run and get your money because y'all heard E. Michelle say, this is what don't go run and get your money. Don't tell them they got to see you about your money. My bad. Okay.
You are silly.
Let me see. I think that was the question. So, okay, drop. I'm laughing. She said, no, wrong people. Okay, I think we covered all the apps. We covered you need to know your terminology and choosing things that work right for you and where you're at. So you started with $500. That may not be everyone else's start. Like maybe you start with $100 of investing in one particular stock, right? Or instead of like doing multiples. So I guess give us like a last little nugget. Give us some Kristyn Alexis, live your best life kind of simple advice that we can walk away with so that when we start studying, we have it like kind of stuck in our heads.
Yeah. I think the biggest thing is to start where you are. So there was a guy who recently, I'm in a couple groups on Facebook, and there was this guy who he posted his, I guess his total P&L, which is basically your profits and loss and the total amount of his account. And his account was worth at that day $350,000. And someone in the comment section said, how did you make $350,000? Like, what has been your strategy? Because he also said that since March, in March, he said he had 245,000. And since then, he's grown 245,000 to 350,000. And he basically said that every 2 weeks, he invests $50 in his account. And he's done that for years. So that $50. And even if you look at Warren Buffett, when Warren Buffett first started, he started his account. And if you look at his gains, it was pretty flat and then it compounded. And the cool thing about investing, even if you decide, let's say you say every paycheck, I'm going to buy a share of Apple. Okay. Apple right now, today they were $110, which I have some of their stock right now and it's hurting me, but you can buy Apple for 110. It may be 115 next week. That's not a lot. Think about all the things we spend money on, bundles and shoes.
Right. What you said.
So if you can spend money on things that are going to add you no value,
okay,
you can take $50 and put it in your brokerage account on your paycheck. Maybe you do it once a month. Maybe you do $100 a month, which is $1,200 a year. Like I started with $500 in my Webull, and right now I haven't really done much with that account because I've been focused more on my big boy. I call it the big boy account, but my account right now I'm sitting on $1,600. And when I first started with that $500, I doubled the $500 in like 2 weeks, and that was because I invested in a company called Novavax, who their stock went from like $50 to, I want to say, to $100. Like, well, it didn't go to 50 to 100. It went from like 30 to 60. I forget, whatever it was, I doubled when I bought in. I literally doubled my money that day. So, you can get into things and play around and like grow your money, but the best thing to do is grow it slow. You know what I'm saying? So lately what I've been doing is when I'm not playing with my big boy, I'll come over to that account and I'll do a trade. Because when you don't have 25,000, you can only do 3 day trades a week.
Okay.
Then I'll go over there, a couple times a week, and I'll just be like, okay, today I'm going to make $50. And I'll put my money in something. And this week I've been pretty successful with doing that. So I just say, start where you are, maybe make a point where you say, okay, I really like Peloton. Every payday, I'm going to buy 1 share of Peloton. Peloton right now, today, you could buy Peloton for $85. Even at the max, because their projection right now is that they're projected to be worth anywhere from $110 to $120. So even when they get to that price, they're a really good company. They've shown themselves to be a strong company, have a lot of opportunity. Find a company you feel good about and start where you are. You know what I mean?
Yeah.
Something we all can do. And maybe you say, okay, well, I can't afford that much. I want to do something that's a little less expensive, like a Pfizer. And Pfizer, even though there's not as much money to grow, Pfizer does pay dividends. So when you hold their stock on a quarterly basis, they give you, I think it's like 34 cents for every share.
Oh,
that
wow.
34 cents adds up. You know what I
Yeah.
mean? So once you start to collect that dividend and that gets deposited into your brokerage account, you could turn around and take that money and put it in something else. You know,
wow.
so I say start where you are. That's my plan, is just to continue to build my account by investing a little bit at a time, because I figured all these years I've spent money on things that have added no value to me. You know what I mean? If I scroll up, I got bags up there and stuff that's like, it's nice to have, but I could take that same money, put it in an account, earn money, and taken my earned money and bought the bag. You know what I mean?
Yeah.
I should just say start where you are, but learn first. Don't go giving your money to people like me who gonna try to come in here and snatch it from somebody who don't know what they do.
Right. Cool. Okay. So, oh, Karen asked, did you talk about long-term investing versus short-term investing? And I think we kind of touched on it, but we can like dive in.
Yeah. So, there's definitely differences in like doing one versus the other. I think it's also important to decide for your personality style what you're comfortable with. There's also other things you can get into. Like, let's say you don't want to buy an individual company. You want to buy a grouping of companies that's a little bit safer. You can actually get into, I think they're called ETFs, where it's like a group of companies. You can buy, there's actually some too that are like the whole stock market or the whole, S&P. You can do things to mitigate your risk like that as well.
Okay.
And in terms of like the long term, short term, there's people who are considered to be day traders, where they buy in the morning or buy at some point in the day, and then they sell it in the same day. There's people called swing traders, where they buy in the day, they hold, and then they sell when it reaches their out price. And then there's people called position traders, where they buy, they're like the Warren Buffetts, where they buy and they go, okay, I'm buying Dell, and I'm going to hold Dell until I reach this point where I feel like I need to move on to another position. So you kind of really have to find your sweet spot, your personality, like just style that fits trading. Like for me, I'm just a little too controlling to hold stock. Like I have to hold my Peloton that I had left, and it really makes me feel very uncomfortable holding through the weekend.
Really?
I don't like it. I do not like holding shares. I've been in Apple now because I told you I bought some Apple. I had called myself going long, and that was going to be my first long hold. And I do not like it. It just makes me feel very uncomfortable. So for me, I think I personally need to be in things that are a little bit more secure than an individual stock if I'm going to hold long.
Okay.
I think for me, I like day trading, things like that, because I feel like, okay, I come in at this price, I get out, I go to sleep. I know my money is in my account. It's not over in nobody else's account sitting there, because after hours, things can happen. You can't really mitigate your risk after hours. You can't put stop sells in place. You can't, like, the stop sell can be there, but it's not going to trigger, Okay. I don't feel as comfortable, but I think you really have to find for your personality style what makes you feel better. A lot of people feel better. Like my husband is a long trader, so he comes in, puts his money, he's not going to look at it. He's like, that money is there. That company's not going nowhere. It's going to grow over time. I'm not worried about it. Me, I'll be like, did you see what happened to such and such company? Don't you have them? Yeah, I got them. You know what? Controlling. So you just have to find for your personality style what fits you.
Cool. And that's what I was gonna ask you about too. Well, actually mention, because I know that you and Brian are both, doing the trading, but both of you guys' personalities in the trading atmosphere are so different. And I think I crack up when you tell that story because it's so funny. Like you're like, we got this. I'm finna go. And he like relax. Just
yeah, exactly.
relax.
That's him. And I'm very controlling. I feel like I always am trying to mitigate risk, and I need to make sure that I'm doing what I got to do to make sure that I get to, wherever I want to get to and hit this goal. And if I feel like it's not cooperating, I want out, I got to move on. So that's just for me why I feel better with day trading, but there's the pros and cons there. Day trading is stressful too, though. Don't get me wrong. I'll be stressed out for them 20 minutes.
See, I don't think, I'm gonna have to just work on a process. How long, like how many, I guess, hours a day, or what's your time frame a day that you spend with your money market?
Yeah. I would probably say for me, if I'm in a good flow, I could do like 30 minutes in the market and then I try to walk away.
Mm-hmm.
A lot of times it can be challenging. So what I have to do, especially with my job, is I'll set up alerts where, okay, I know I have, and that's another reason why I can only really trade a couple stocks at a time. So it's like, I know I have Apple and Peloton. I set up alerts where I want to know if the stock goes to a certain price high, because I want to make a decision if I want to get out or not. Mm-hmm. And I set alerts for if it comes low, like if it falls low. And then I also have my stop sell, and I have stop limits set where I know, okay, if Peloton hits $105, I'm out. So the analyst said 120. But I'm cool because I don't even want to take the chance. I just get me to the 105, and when it hits that and triggers, I'm out. So, for me, I probably would spend like 30 minutes. And on a good day, I can hop in a trade in the morning, wait till it dips down. Once it hits the support level price that I've established, which is why I say understand support and resistance. Because when you know those prices, you know when it's going to hit the bottom and it's going to test that price. And I want to buy that price, and then I just ride it up, and when you know the stock and you've watched it for a few days, you know what it's going to do,
Yeah.
Mm-hmm.
Cool. Oh man, this is so cool. Like I love learning new stuff. Like it really excites me. Now I'm hoping that I can keep this excitement into the morning, because I really have set aside some time in my planner. I was like, I'm setting aside 2 hours tomorrow to really focus on learning more about the stocks that I do own, and hoping that this conversation was going to lead me to actually doing that tomorrow and not lead me the other way. So I am motivated now to doing that. And you have videos on your channel kind of explaining some of the things that you do, and when you're vlogging and stuff like that as well. So I definitely think that people should go over there and kind of watch the things that you do throughout the day. She vlogs, so you can see kind of her process that she goes through. And it's Kristyn Alexis, like the name says on there. You guys can go to Kristyn Alexis on YouTube and follow her, because she's doing this stuff. And like I said, I think that's why I loved it so much, was that you're so you're like a regular person. Like this isn't your job. You know what I'm saying? Like anybody it is their job, that's all well and fine. But sometimes you just want to hear from somebody that's kind of like you, like, okay, I'm just getting started. What do I do? And being realistic, like I'm not going to win every day. I'm going to have some
you're gonna take losses. You're going to take some L's.
Yeah.
But if I could give one last little pearl, anytime you enter a trade, have a amount of money that you're willing to lose.
Oh, willing to lose?
Yeah. So
no money.
You have every trade. You have to come in with a price, because the thing is,
write it down, but I don't like it.
Every time it's trying to figure out where it wants to go, you're gonna see the price doing this. And when you buy, it's not just gonna go up. It's it may test your price. And if you get lucky, you'll catch a stock that has a really good momentum going up, and maybe it won't test your price too much. But you have to have a price that you're willing to set below your entry price to pull you out, because What you do not want to have happen is you allow the stock to come down too far underneath your entry price, and then you didn't have a set stop market in place, and that stock falls like Peloton fell all day. There were people today who bought the top of Peloton at $198, $97, $96, and who rode it all the way down to it hit $83 if I'm not mistaken.
Uh-huh.
Do not want that to happen, and that very easily I've seen that happen to people like that. So never enter a trade without having your amount of money you're willing to lose, whether it be $50, $5, depending on how many shares. And then let's say you go, okay, I want to have more room for the stock to kind of do this.
Mm-hmm.
So if you know your amount of money that you're willing to lose is $50, because let's say you say, okay, I want to make 300 in a day, so I'm willing to lose 50 because I know I can make 300 on, with the probability of I do 4 trades, 3 of them are going to go well, and I know 1 is likely to go bad. You got to have the amount you're willing to lose. And when you have that, you need to calculate how many shares it takes to give you that threshold of safety. If you buy too many shares, you're going to have a smaller window of what's, a comfortable place for that price to fluctuate. So you really want to know that and make sure when you're coming into that trade that you're comfortable. And I see somebody just said, don't catch a falling knife chasing the price. That is so true. If you ever see price coming down, I feel like I could just continue to go on, but those things that we mentioned at the beginning, like make sure you understand price action, make sure you understand trend lines, how to graph trend lines.
Mm-hmm.
If you want to graph those trends and see what the stock is doing before you come into that trade. You know what I mean? Anybody who understands trend lines could have very easily graphed Peloton's trend today and knew that was a downward trend line. It had lower highs and lower lows all day. So that would have been a bad trade to come in unless you saw on the chart that the trend changed. It signals an entry. So you don't want to ever try to catch a falling knife, because you could be doing this all day trying to get in. And guess what? Every time you jump in, it's going to pull you out belower. Wow. So those are mistakes that you do not want to have to learn the hard way. And I have done that. You know what I mean? I've done that and jumped right into a fallen trade. And then I was
that's the first time I ever heard that saying. Don't try to catch a falling knife chasing the price. That's the first time. That sounds like some grandma life lessons right there.
Yeah. It's true, because that's exactly what it looks like. That stock coming down.
Yeah. Wow. Mm-hmm. Well, yeah, if they have questions, I'm sure they can, like I said, follow Kristyn, because she is putting documenting her process, which is what I love. And plus I just love Kristyn anyway, so go follow her. But you guys can follow her everywhere. She's Kristyn Alexis, because she's good like that. And I'm so thankful that you came on tonight and did this with us, just kind of giving us the feels of, what it takes to kind of get into and motivate us to say we can. Like, I feel like I can do it now. So thank you so much, Kristyn.
You are so welcome. I love to talk about this stuff, so this was right up my alley.
I know, girl. I was like, yes. Like, I would just let you keep on talking. You know how YouTube get these videos start getting long and they don't want to promote you anymore. Girl. So
I know. But right. Just leave everybody with something. We don't see a lot of people like us in the market. If you look at the statistics, there's not a lot of people of color who trade. Mm-hmm. And I think that that's changing. But at the same time, one thing I just want to say is don't let the market intimidate you from getting into it. And do your research and build your confidence, because once you build your confidence and you understand ways to mitigate your risk, you can start to enter in comfortably and feel good about it, and as well as build wealth for yourself and your family. I've seen too many people who are starting to build wealth for themselves. I've had a number of $1,000 days trading, you know what I mean? And think about if you could literally make $1,000 every single day in the market, like what would that do for your family? And it's not impossible. Like, there was someone who, my friend just sent me a text earlier, a screenshot from the lady she took a class with, and the person who also took the class posted today that their account net worth is $759,000. And this person said they started with $35,000 3 weeks ago. 3 weeks ago. And they have over $700,000 in their account right now.
What?
You can do it. And that right there is like, that's a huge, everybody's not going to do that.
Yeah.
But you also can get to the point where you say, okay, I want to make $50 a day or $10 a day. What would $10 a day do for you multiplied by, how many days are there in a work week times 52? Like, what would that do for you? What would $50 do? I've done the calculation to make another $100,000 a year. That's going to take me $378 a day. So if I can make $378 every single day trading, I could make an additional 6 figures to my income. $300 a day right now for me feels like a comfortable number.
Yeah.
And I think just you start and you build that snowball and you can do it, and anybody can do it. So just take the time, build the strategy. And this isn't like one of them things where people come to you and they try to sell you something.
Yeah.
Telling you this, I get nothing. I don't make no money. Like, this is like me just wanting you guys to do it because I know what can happen. I know I have friends right now who are making good money doing it. You know what I'm saying? And I really want all my friends. I literally sat down with my best friend today because she's been pushing back on me like, girl, no, I'm not going to do it. No, today I sat down and I went through with her how to set up her account. We got her rolling. You know what I mean? So I want to see people start to make money, start to build wealth. So don't be scared about it. Do your research, build your confidence, and make it happen. Shoot.
Yay, that piece, that's the piece right there. Don't be scared. Don't be scared. And matter of fact, do it scared, because sometimes we just have to push ourselves just to do it.
That's so true. And scared money don't make no money, okay?
That's my language. That's my type of language right there. Scared money don't make money. And here I am scared. And I'm a whole G. Let me go invest some stuff tonight, because I'm ready. Well, it's closed now, but tomorrow I'm going to be ready. Yay. Well, thank everybody for joining us tonight. And this will not be the last time you see Kristyn. I'm going to have her back on for some more stuff. I just know that people were asking, and I was like, oh, my girl, I got my girl. Like, clearly I can ask her. And I'm so thankful that she was willing to do it. And I'm so happy for everyone who joined us tonight. So we will catch you guys in our next Financial Friday video. So make sure you stay tuned. Every Friday, you'll get some special tips and stuff going down here on the channel. So make sure you guys are subscribed and you hit the like button on this video so she knows that y'all loved it and y'all come back. All right. We'll catch you in the next one. Mwah! Okay. Bye.